Good afternoon out there. Corden Soroka from Allendale's trading floor here in McHenry, Illinois on September 22nd, 2011. It was an ugly Thursday today on the market floor. Corn finished down 35 3/4 at 650 was the settlement. We had a lot of selling in here today. All based off the outside markets. Fund liquidation today by around 12:30. They had already sold about 20,000 contracts of corn was the estimate. So liquidation was out there. The dollar, last I looked, was up about $1.20. So that is forcing some of these large funds out of the market today. We had export sales this morning. Came in at 598 for the corn. That was between the estimates of 400 and 900,000 tons. No China purchases this morning. That was talk of the floor a few days ago, that it did make economic sense for China to come in and purchase U.S. corn. However, we have not seen it yet, so we do have one more day this week, tomorrow, that we could see these purchases. If not, we're going to have to look towards next week. The beans finished down 37.5 today at 12.83. Pretty much the same story with the beans as is the corn. Fund liquidation because of the strong dollar outside markets, but we'll talk about that in a little bit. We did have an export sale to China though today, 180,000 tons of beans to China, so they were in here as buyers, just not of corn. Wheat today, that finished at 633 3/4, down 33 in Chicago. So they pretty much the same story as the corn and beans. We had fund liquidation. We broke through some key lows today, some good support areas. One of the more recent support areas, we did break through and close below that. We could be headed back to some of those low prices that we even saw way back before we had the Russian drought situation. So we could be headed back to some of those lows. The other issue, we've got ample world supply. So we've got Russia out there having a decent crop this year. They're priced well below ours. Australia looking to have a pretty decent growing season. And a lot of the needs as far as feed is concerned for corn is going to be booked to the wheat. So that's one of the few things that could be supportive. Going back to the corn, that could be something that we could see keep that market under pressure for a little while longer. Some of the booked feed needs from China as well as here domestically are going to be going towards wheat. So that could keep some pressure and could hurt demand in the future. As far as cattle today, we had cattle finishing, or last I saw, was trading at 116.35. That was down $2.90 at some points today. It did trade down the full limit, but did come back off that. We had active trade today at 116, which was steady from Monday, and it is down $1 from last week. So last week it was trading around 117, this week 116. The big issue here that the trade is looking at is the outside markets again. That happens to be the story across our grain and livestock markets. As you know, with everything being pulled back as much as it is in the recession fear in this market, the demand side of the equation always trumps the supply side as far as the cattle. So with that kind of a situation looming and the talk of a possible recession, we should see a little bit more taken off that cattle market, or could see more taken off it on that the recession fear. We do have the cattle on feed report this Friday. That is going to be released at 2 p.m. Trade is looking for placements to increase by about 8%. So that goes back to the drought that we've seen in the southern plains here, Texas, Oklahoma, placing a lot more cattle just because of the lack of moisture they've seen. It looks like the drought may be starting to break here a little bit. We have gotten some rains, but it is still a lot of the pasture land is still rated poor to very poor. Hogs today, second day in a row of lower cash trade, so we probably are seeing that seasonal top that usually will come right after the pork month buying. So we're starting to see that here. That mixed with kind of the same issue as the demand side is in question. So seasonals look bearish, demand sides look bearish. For the hogs, we should see some more pressure. Deese finished at 81.90, and the hogs, those were down 220 as well. Outside markets, the bigger picture here, this is what's been moving everything around. The trade has been unhappy with what the Fed policies were released yesterday. The twist where the Fed's going to be moving more of their portfolio of cash to more long-term bonds as opposed to short-term as a way to kind of flatten out that yield curve. So the market's not happy about this. That is going to hurt growth near term, but could help to level us out. More of a long-term picture. That mixed with poor global growth demand forecast released by the IMF I believe that was a few days ago. So both of those things are going to weigh on the outside markets. The dollar seems to be the flight to safety today. Everybody's been in that dollar. Crude today, saw the effects of that. It was down $5.50 a barrel, which is a pretty good size move for the crude. We haven't seen that too much, only a couple times in the last few months. That was trading at $80.40 a barrel. I would say we should look to see that thing retest its more recent low set about a month ago. And last I looked, the Dow was trading at 10,625, down about 383 points for the day. So that's what we've got in the markets for you today. If you guys have any questions, feel free to give us a call. We are seeing some very hectic markets, but you know, we have good guys here at Allendale, good guys to talk to. So feel free to give us a call. We're more than happy to help as far as marketing the 2011, what's left, and the 2012 crop. We've been putting some strategies out there as well to at least get some of that taken care of if we do continue to see this pullback. So, you know, thanks for listening today, guys. The one more thing I wanted to talk about real quick is we have our research special right now, $270 for 13 months. And $90 for 3 months, so it's our harvest special. Check that out. We also have our conference in January. If you're interested in that, give us a call. 800-262-7538 is the number. Website is allendale-inc.com. Feel free to give us a call with any questions. Other than that, take care. We'll see you next week. Have a good weekend.